Welcome back to the Advisor podcast. Today we are speaking with Dr. Patrick Pilati, an institutional capital advisor working at the highest level of private placements on the SIX Swiss exchange. Patrick advises companies, asset owners, and large group of how to access Tier-1 investments. This is part of finance most people never see, but plays a key role in our world. Patrick, welcome to the podcast.
Welcome. Thank you very much.
Patrick, for people hearing about you for the first time, how would you introduce yourself and your work?
How I introduce myself? Well, the easy way is to see me as a highly specialized private investment banking advisor. It's like being a surgeon, you know. So in finance, which is not spoken a lot about, there are people who are highly specialized just in one job. You know, that's what I am. So my specialty is to position companies with a project on a private placement on SIX, which helps them, yes, to raise capital for those projects, but in the same time, to be recognized as a serious companies as Tier 1 level on a worldwide scale. So it's beyond fundraising money.
And for the people who are first time hearing about SIX Swiss exchange, can you please tell us in a few words what is this about?
So it's like the London Stock Exchange, the New York Stock Exchange, NASDAQ, Dubai Stock Exchange. So SIX is how they rebrand themselves in Switzerland as the SIX Swiss Stock Exchange. So it's like saying NASDAQ, but call it the version in Switzerland of the stock exchange.
And how did you came up to this level, and what did the early stage of career look like before institutional mandates and private placements?
Oh, that is all, call it part of your mentorship program. So my mentor, David Sinclair, who passed away prior to COVID, he worked in the stock exchange industry, okay, as a forensic auditor, one. And two, he was placing companies in the stock exchange. And most of the company placed in the stock exchange, they were company near to bankruptcy, okay? So he had a very unique system how to raise capital to place them on the stock exchange as an IPO, and then raise capital against it, okay? So it's not something really you learn from university level. You have to start your mentorship program with somebody already been established in the industry, you know, and recognized as well. I call it is a very, from the outside, it might even look like a VVIP club in the financial world, you know. Yeah, on the textbook you can read about it, you can find information about it, but it's not enough. You don't just wake up one morning and present your CV, you know, I want to do this job. You have to be brought into it, you know, and then you inherit the job from your successor.
And how is the process looks like for a company who wants to raise a capital, like Tier 1 capital from SIX? How the process looks like? What is the timeline? And what are the steps?
Okay, so process-wise, it's very easy. It's very easy if you start thinking like a Fortune 500 company, at Tier 1. And that's what the biggest mistake a lot of people do. They think that they have to present a lot of detailed paperwork. Yes, it's true. But the paperwork, only somebody who works at Tier 1 level can explain you how to do it correctly, okay? But it's about really thinking like a Fortune 500 when you don't have the money yet in the bank. So psychologically, it's very difficult. How can I think like a billionaire when I don't have $1 billion in the bank? Or I was not able to raise $1 billion. So that's why there's a very few percentages of companies getting accepted in the first level of qualification to get registered for that reason. So, what is a tier one company? Number one, okay? Tier one company thinks beyond the money, okay? Raising capital is 1% of your work. The remaining 99% of your work is about building a legacy, providing jobs, being ESG compliant, okay? So ESG compliant is the new trend for Fortune 500s. What does it mean? It means that you are collaborating with governments where your business is located, and you're supporting the government activities, but you're even supporting the community activities. So it's not only creating jobs, maybe it's creating, collaborating, creating green zone areas where after work you can go and relax and live a life, you know? So it's beyond your business as well. You have to be part of the community as well. So it's a very complex machine, you know? Because tier one companies, they're actually contributing at the global economy, growth rate, okay? That's what it means. You're not just there making income for yourself. You're generating income for other people.
Basically creating the economy for the country that you're business in.
Yeah.
And how is SIX fundamentally different from like public stock exchange? People are far familiar with if you compare them.
Yeah, so everybody knows IPOs.
Yes.
I have a startup, I make some money, or I raise some capital, not to make some money, and I want to go in IPO. Okay? So IPOs are very expensive, extremely expensive. They cost a couple of $1 million just to get into the IPO. And yes, you're going to be visible to what we call the retail market. Okay? So retail market is everybody's got an app on their phone today, and they're buying stocks of Apple, of Netflix, you name them. That's what an IPO is, okay? And they raise capital through that way, selling stocks, okay? Now, a private placement on SIX was actually created in the 1998. It was not existing before. It was created in Switzerland. Because what Tier 1 investment institutions found out is that there were a lot of good companies around the globe, but needed a new structure, how they could raise capital and position those companies next to them to grow the economy at a global level, okay? So it was created on a very particular purpose. So that's why it was called a private placement. And the SIX Swiss Stock Exchange was the one who approved it, you know, after 2 years of, call it filing paperwork, understanding the system. Because it has to be, yes, regulated to create credibility on the company, but at the same time, it has to be a little bit more elastic than an IPO and easy to do and quicker to do. An IPO can take you even 1 year to do. A private placement on SIX, if you have the proper advisor, Tier 1 level, will take you 8 weeks to do.
8 weeks.
8 weeks. So from 8 weeks to a year to 2 years is a big gap, you know? But when I say 8 weeks, I mean that on the 9th week, you actually have the full capital in your bank account.
And if you're talking about numbers, which amount of capital can
So private placements were born for very large institutional amounts. So I would say right now the minimum is looking at $25 million minimum to anything up to $1 trillion.
1 trillion?
Yes.
With T.
So the private placement market on SIX sells every day, every year, sells $1.3 trillion of securities to 3.5 trillion every year. Okay? This is what it means. It means money, it's available. But it's only available to those companies, or call them founders, because the company is run by people, so they're the founders. They really understand sophisticated investment structures. Okay? And because going tier 1 is sophisticated, okay? It's beyond money, all right? Because once you're there, yes, you already collected your money, but you're positioned there to build the economy, okay? So you become a catalyst to the construction of the economy. So if you have a $300 million project and the company is brand new, like 1 month old, but the founders and the C-level staff that you have employed, they know how to manage 300 million, you're going to get approved to go on 6. And once that happens, it's already you already won, because your securities are going to be purchased automatically by Tier 1 investment institutions. So part of these Tier 1 investment institutions are only 15 entities worldwide, by the way. To mention a couple of them who people are more familiar with, you have UBS Bank, you have BlackRock, you have the Rothschild family institution, which is the IA family office, but an institution because of the amount of wealth they have. So you have big players, okay? You have the sovereign funds from Abu Dhabi, by the way, members of the Tier 1 level. Because what they're doing, they're buying a piece of paper. They're buying a recognized security registered on the stock exchange. So you're creating a product for them to buy. The difficult part is to get to enter. Once you're there, you're done. You have to be smart enough to show you can manage now. Okay?
And you said the 6 exchange placement is beyond money, and it's about thinking like Fortune 500 company.
Yeah.
And what does this exactly mean? So it's creating the job and creating economy. And can you tell us more about
It's long-term vision.
vision?
Yeah, so the vision is not 1 or 2 years. It's at least 5 to 10 years. Okay? Now, when you have a vision of 5 to 10 years, you are thinking completely different. Now, how many people can do that?
Very few.
Create a spreadsheet for 5 to 10 years. Kind of predict in 5 to 10 years what is going to happen. So you are positioning yourself as an underwriter of the future economy, correct? You know money is not the issue. In your brain, you said to yourself, money is not the issue. The issue is not something else. Do I have the people to build the economy in the next 5 to 10 years? That is the issue, the manpower behind it. Because companies are not driven by robots. They're driven by humans. And the problem right now is you don't have that human capital to drive Fortune 500s anymore like before. It's not about grinding 15 hours a day. It was coming out with smart solutions and how to implement those smart solutions. You know, you're always going to have roadblocks, you know, problems to solve on the way. But how smart are you to solve all those problems?
And let's imagine some company came to you and said, I want a placement on 6. So which
we do have a
yeah,
lot.
what, yeah.
I love you are coming, by the way, asking that question.
And what could you advise to them on how to prepare and what you are looking at when you are doing the qualification?
I always tell them, don't think it's an easy path to go through. Okay, it's like rock climbing without any safety ropes. So you're free climbing a mountain. Okay, and don't get discouraged during the approval process if they ask you 1 million questions. Okay, because those million questions they ask you, and sometimes even repeated questions. Your balance sheet is not detailed enough. Do it detailed. It's like getting a PhD at university. So you have to be ready for the ultimate grind, you know? So those 8 weeks are hell on earth. Because either you're able to do it yourself, or you have an advisor helping you to do it, but internally you need to have somebody allocated for that project. It's a project on its own, just the registration process. It's not just filling out some forms and paying the money, you know? So it's really about presenting yourself. There's stupid stuff, like, for example, like people don't know how to do, is writing a business plan at Tier 1 level.
Mm-hmm.
People get confused. I need to show my numbers. I said, no, you're not raising capital anymore.
Mm-hmm.
You're just writing a business plan on your company and on the people in that company, what they're doing every day. It's like writing or preparing an investor's brochure. Because the word says investor's brochure, they think I'm promoting my investment. So no,
Mm-hmm.
you're not promoting your investment anymore because you already know you have the money coming in. You're promoting what you're doing every day. What is your giving back to society? So those two very basic documentation, they become so complex that you have never done it. You never know how to do it. And you can use ChatGPT, Google it, whatever you want. You will not find the solution to the answer unless you go to somebody who tells you how to do it.
Mm. And what is the approval rate from your experience? Like, for example, from 10 companies, how much gets approved?
Let's say percentage-wise, we always have like 20% of the companies coming to us from day one not being approved. Not being approved. But not because they don't have a good project, by the way. They don't have a good ecosystem.
Mm.
So the manpower is not good enough. You know, the project is fantastic, but the manpower is not Tier 1.
Mm.
So there's two solutions to the problem. Go and hire Tier 1, which will cost you money, you know, or educate yourself. Take a couple of years to learn, you know. So sometimes when we see a really good project behind it, you know, but we see that the C-level is not good. What we propose to the founders is training programs right now, you know, cost-effective, nothing crazy, you know, but very practical training program to train the C-level, you know. And majority of the C-level, they come from sales.
Mm-hmm.
And they think everything is sales. I said, no, nothing is sales anymore here.
Mm-hmm.
You're already here sitting with me. I will give you the money. Talk about you. Talk about your company. That's difficult to do, you know? And we saw that over and over. And of course, from that batch that we train, a couple of them, they die, you know? They don't even make it. And the problem is theirs now. They don't want to understand. They don't want to implement something new, you know?
And on a global scale, what role does SIX plays in the institutional capital ecosystem? What role SIX plays? Because
Switzerland always played a very strong role in the financial market. Mm-hmm. So it's been one of the, call it, main pillars of the financial market since World War II. Okay? So you must understand that the entire economy kind of looks at what SIX does, you know? I'm not saying that the SIX market influences the market, the stock exchange. You have other stock markets like the London Stock Exchange, NASDAQ, New York Stock Exchange, the Hong Kong Stock Exchange, Singaporean Stock Exchange. Those are more active from a retail perspective, you know. But because SIX, let's call them the real private banking institution are in Switzerland for the privacy that they provide, they play an important role on the global economy. Now, SIX as a stock exchange is a very tough institution to get in because they will check everything, okay? Even your client base. So they will check even that your clients are not sanctioned individuals or companies, okay? They will check your background for the last 20 years. Even things, maybe what you have done in university. They would start checking on that. So the regulator in Switzerland, which is FIMNA, is known for how meticulous they are in checking, you know. So once you pass all of that, you are a clean baby. You know, there's really nothing wrong with you. Okay.
And how has SIX evolved in the post-COVID world?
So what we have noticed is that companies who actually were in the private placement on SIX, they actually survived COVID in a big way. They did not fire their staff. Most companies did fire their staff, trying to survive. Some of them, even by firing their staff, they still died. But the company on the private placement 6, they actually were able to survive because they were tapping into a different kind of capital, you know. So the Tier-1 investment institution capital, it's there because there's a, call it that your project is backed up by something else, by a bond, or Euroclear bond, okay, registered on the stock exchange. That on its own, it's money sitting there, you know?
Mm-hmm.
And it's shown, like in a crisis like COVID, like it really saved a lot of companies. You are there. So now there is a trend trying to get into SIX, but the biggest difficulty is you have to change your mentality. Everyone say, oh, I'm raising capital. Oh, I'm doing, everything is raising capital, around raising capital. You're beyond that right now, you know? You're beyond that.
And why do you think institutional investors rely more on people rather than platform and projects? What do you think is the reason?
Let's put it this way. Yes, you could have everybody changing their mindset, thinking like Tier-1, and position themselves on a private placement on 6 and raising their capital. That's call it the perfect world, how it should be today. But that mentality is very difficult to follow. You see, if I go to any startup and said, okay, I will help you to fundraise money, traditional way, you create your pitch deck, you go into call it incubators, where angel investors, VCs go, you pitch your idea, they look at your numbers. Most of the time the answer is no, correct?
Yes.
Let's say 10% is yes. And you never figure out why they told you yes, end of the day. And then they'll tell you, I'm going to invest if you have in the pipeline a future IPO, okay? From our perspective, we look at them as trying to play to make money, okay?
Mm-hmm.
So what I mean trying to play to make money is I'm in my sandbox and I'm a kid, I'm playing. I don't know if I want to make money in my life, but I'm trying to do something, okay? When somebody comes to us and says, look, I've heard about private placements, there's not much information, and after you told them what it's all about, the benefits, what it's all about, said, I'm ready. I'm willing to go forward now. Okay, no problem. Now, those people have understood something beyond money now. They're not stuck with money. So when you're stuck with money as a classic startup, you see money as a tool. As a tool controlling you. Okay? Now, Tier-1 investment institutions, they don't see money as a tool controlling them. They see money as a tool to make changes. Okay? Mm-hmm. If I was a startup today and I'm raising capital, I will give an opportunity to investors to come and join me. Because their money is a tool to create more jobs, to make a better a better economy. So I will have interpreted in a different way. But all the startups today, or people fundraising money, they've got priorities. Their priority is to have a paycheck every month. Okay? And then what they do? They advertise, I've raised $50 million. There's no reward in raising $50 million. The reward is how much money you made from the 50 million. 100 million, 200, 300? How many jobs have you created? Now that is a trophy. Okay? So what has happened is 99% of the population does not sees money in the wrong way. Okay? Money is there to be spent. Bank will reward your bank account if you spend money, not if you keep it in the bank. This is where people get it wrong. Tier 1 investment institution, they know that money has to be spent, has to move from hand in hand. That's how the economy grows and is stabilized. But if we all start saving money, what will happen? There's no shopping malls, correct?
Yes.
There's no more supermarkets. So this is what people don't understand what is economy. But unfortunately, in society, you have to keep some people a little bit dumb. Otherwise, the 1% will not exist.
Yes. And you often talk about trust being more important than capital. How can you describe it on institutional level?
Okay. So you see, everybody. So I have to take back a couple of steps here. Now, one of the biggest problem is everybody's focusing on ROIs. Okay, ROIs, balance sheets, and I always say one thing: the ROI in the balance sheet is a potential future projection based on today, not on tomorrow. Because I don't know tomorrow how the economy has changed. If the interest rate of a loan goes up or down, I don't know. Okay. So it's hypothetical. Okay.
Yes.
So if I allocate $1 million for a company, the first thing I need to have is trust with them. I need to be able to trust them with my money. But I have to be conscious as well that $1 million can be lost with bad decisions. I'll never see it back. Now, I've told you that there's a minimum of $1.3 trillion every year used for purchase of securities on 6 or private placements, correct?
Correct.
How much money really it's in the banks of all these 15 institutions? If they're willing to lose 1.3 trillion a year, how much money really they have?
I've heard that capitalization of BlackRock is around 17.
So 15 of the institutions together buy 1.3 trillion. Can you imagine how much money more they have? We always say the problem is, or what I hear, I don't say it anymore, after 15 years in the industry, I don't say it. I hear, there's not enough money, it's a bad year, they don't invest. Bullshit. It's not true. They don't invest because they have the right structure. So the mistake is not theirs, it's yours. Adapt yourself to what they really need you to do, Because there is 1.3 trillion at least every year. They're buying securities, but you cannot expect them to appreciate you if they find out that the money that they're actually investing in is used for buying a new Lamborghini, a new penthouse, I need a private jet. Think about the business. Think about the people, the jobs they have to create. Think about needing towards the government. Pay your taxes. Don't run away from paying your taxes. There's no need to. You can still make money by paying taxes, you know? So this is the thing where people are getting lost, you know? They have to, for my opinion, they have to relearn what finance is all about today, you know? Like really learn everything.
And can trust be rebuilt once it's broken on that level, on tier 1 level?
Oh, no.
It's just you have only one chance. If you lose it,
It's not about one chance. It's trust can be broken in multiple ways, you know. I mean, I could be running in a bad way my company, but if I don't say it, the fault is mine, then the trust will be broken automatically. You cannot blame somebody else. If you're the leader, you have to lead. Not to dictate, you have to lead, you know? Because everybody can be a high performer at Tier 1 level if they've been trained. Because some majority of people have potential, but they're not trained. Nobody can become a Cristiano Ronaldo if you don't have a good coach training you. You know, that born, I'm Cristiano Ronaldo. Impossible. You have to be trained, you know? So training is important. Training doesn't mean that you are 70 years old, you know everything. No, you might not know everything because maybe you're not trained for those type of activities, you know, as a high performer, okay? So training is key.
and
It's
how,
key.
And how to train?
It really
what way?
depends. It depends on the situations, you know, on what is really required. But the most important training is creative thinking, problem solving. You know, there's always a solution to a problem. The only thing we cannot control is our health, technically speaking. You know? But when it comes to money, you can control it. You can find a solution to the problem. The product doesn't sell, go to the drawing board. Redesign the product until you find the right one, you know? So every single problem that we have, 90% of them are being created by us, the problems, not by the community. You know? A lot of companies now are merging together. Why? They don't want to compete. Same industry, let's merge together under one company. Because we retain the clientele. Okay? Even banks are doing that. They're merging together. A small bank with a big bank merge together, you know? Because I have my clientele base, you have yours, let's merge together. You have more infrastructure. I will use your infrastructure to expand it, you know? So competing, I would say the big word is do not compete. Ally yourself with somebody else. Why be jealous, you know, if somebody's better than you? Because maybe you have something that they need. So don't compete. Just work together.
That's great. And you told something really, really like out of mind of average entrepreneur and founder that only in 8 weeks you can raise capital up to 1 trillion. If it's on tier 1 level, everything moves so fast. How fast can decision really be made on institutional level? So there is no documentation, no procurement, no bureaucracy. If it can be done on 8 weeks, how other decisions on that level can be made? How fast?
Well, that is kind of asking to the committee in Switzerland on 6 what they look at. I mean, yes, we do know what they look at. We try to match as much as we can to give the right answers, you know. You know, sometimes it's rewarding a student for his effort than for his accomplishments. All right? because I will keep betting on a student who is always trying hard, maybe comes always second place. Then the student is only wants to look for the first place, but he's constantly on the second or third place. He's constant in what he's doing every day. And that student gets rewarded, he gets approved. Maybe not the first one, the first place student, the second stage student. Mm-hmm. So it's a different way how to see, you know? How to see. It's a very army style type of decision. But consistency has to be there. I don't want you to spike out and make $1 billion today. You can make 100 million. That's okay for me. But you're consistent in what you're doing.
Mm. And what makes an idea clear enough for institutional capital?
Oh, it's not your idea.
It's not about idea at all?
No. It's about your board and your team. I mean, everybody comes with the same things. AI, real estate development, what else? Data centers is quite a big trend right now. What else? We have agricultural projects. So the product in say is not important. But you have to always emphasize your team, your expertise.
And do this tier one investment have list of industries, like clear list of industries they invest in?
No.
They can invest in anything.
It doesn't work that way. It's beyond money right now.
So they can go to fintech, they can go to AI, they can go to...
Anything. You see, how much do you believe in it? That's a big question. If you come to me and you say, I believe in you, what does it mean? It means I believe in you. Do you have the team to take my 300 million and manage it correctly? That's a big question. So when the committee meets and reviews the documentation and asks more question, is to analyze, does the team in that company have the right team to deploy the capital and manage it?
Okay.
So that's why we say you're not raising capital anymore. You're creating the future economy.
And what mistakes do founder make which might look them like they're short-term thinkers?
The big mistake, well, there's only one, by the way, is they don't listen to the sponsor when they're talking to them. That's the biggest mistake. So people like me, they act like as a sponsor in front of the committee, okay? So yes, we are the private investment banker, advisor, but we call sponsors. So when the question comes in during the review, we tell them there's always a way how to explain it, okay? So we are very creative people. So we look at the things in a different perspective. We tell them, explain it in this way. When you receive the email, reply in this way. Exactly like this. They don't do it, they do it their own way. So, because we know how it's been, it's like we speak English, but we don't speak the same English. You know? And they have to be willing to transition to exactly what we tell them. Okay? So this is the biggest mistake they make. You know? So the first part of a private placement process is to get registered. With what? It's not important. But what the committee wants to see is a clear, simple vision. For example, you're raising capital for building the next generation quantum computer. Okay. Keep it simple. Don't complicate it. Don't tell me that by once you start building your quantum computer, you have to build your own office complex and you have to build your real estate company. You're confusing yourself. Focus on one simple project. You do that, now you're showing your Fortune 500. Then afterwards, you could have the real estate department because you need to have offices, correct? Then you can have a division where you build your own microchips. That's a different product. But the first product has to be clear. So it's going back to the roots of simplicity. One simple product. What is your product? You're a farmer? Corn. I farm corn. Perfect. How much you want? 100 million. Here's 100 million. You're farming corn. You're being simple, truthful. If after you're going to build a real estate complex because you have the farmers who have to come and farm, and then after you're going to build the warehouses to store your corn and to process your corn, all that is additional. But focus on the main objective is get listed with your first idea.
And for a lot of startup founders who are right now doing Series A, B, C, it sounds really crazy that you can raise 300 million and in 8 weeks, and all this, am I understanding it correctly? So if you raised, for example, 300 million, you passed the 8 weeks, you will get 300 million at once. No rounds of investments.
No. They don't exist. Absolutely.
No pitch decks.
No, because I'm buying your position on the stock market. So I'm buying your security on the stock exchange. I issue $300 million worth of securities. I want to invest 20 million, I buy 20 million of it. The stock exchange is guaranteeing to me that you are a good company. So I don't need to read your pitch deck. Yeah, I might Google you just to find out, what the hell are you doing every day, But once I take those securities and I put them on my balance sheet, my company balance sheet, what I do, I can use the securities to leverage credit lines, whatever I need to, for my company now, okay? Now, when you have to repay back that money, either 5 to 10 years from now. But I will not come and look for you every day. In 10 years, we call them coupons, they mature, you have to pay me back. If you're not able to pay me back, and those coupons have been insured through an insurance company, the insurance company will pay me back my money. But in those 10 years, I already used it. What I mean using it? I can use that with my bank to leverage credit lines. Because it's financial paper. It's a bond. I didn't buy junk, So there's no risk for me. Now, you should be smart in spending the money in a smart way and make something out of it for yourself and for your partners and create jobs, whatever else you want to do, and change the world if you want to change the world. I don't know what you want to do. And if you can slide in a Lamborghini, so you have a Lamborghini as well, to drive every day. But what I mean, it's really a different concept, behind it.
And during your speech today, you never mentioned any kind of metrics. How many clients you have, what's your balance sheet, what's your income, what's your revenue, and all this stuff. What are initial metrics just to start thinking about going there? Or it's everything?
My average client is, can be, I have between startup companies. Well, startup company because it's a brand new company, maybe 1 month old. But the people behind it, they've been into the business world for the past 20 years, very successfully running their own business. Then I have companies which are already doing $40 billion a year of turnover, and they need more cash liquidity. because they want to own a bigger market share. And they're already very strong in the markets, okay? So these are the two type of clientele I have, okay? And then I have a lot of millionaires and billionaires who come and say, listen, I want to do maybe data centers and I need to raise capital. I said, okay. And they want to do private placements. Because private placement is private. So we're not even allowed to mention who they are publicly, you know? And so they don't want to make noise. They don't want to do the hard work. So they're not looking for a trophy anymore. They're looking for something different than a trophy, you know? So even us, private people like me, who are specialized in guiding them, because I call myself more of a guide, you know? In guiding them in the process, and even after they've been positioned, how to manage their relationship with Tier 1 investment institution. We are not looking for a trophy. We made it. I'm living a very comfortable life. I don't have to show off anything to nobody. What more do you want? I mean, at 6:30 every day, I shut off. I'm living my private life, you know, and that's it.
And I think last question: what excites you the most in your job?
In my job?
Yes.
Oh my God, I got a lot of problems to solve every day. I think is the problem solving.
Problem solving.
Yeah, it's not boring. It's not a boring financial job, you know, that, oh, you have to pitch, oh, you have to convince. I'm not convincing nobody, you know. What I like about it is you're creating the new generation of companies, of Fortune 500 companies. That's what I'm doing in the end, you know. So I'm the guide of the next generation of Fortune 500 companies, you know. And of course, I will not see the results today. I'll see the results maybe in 5 to 10 years. So that is the most exciting part. Because they become like a family in the end. So yes, I'm mentioning the websites as a private bank advisor, you know, but you're really advising the board how to continue and build that ecosystem, you know, of Fortune 500.
So you're like a Sir Alex Ferguson in financial world.
Yeah, in a way of saying yes. Yeah. You can say something like that. But that's the exciting part, you know. But then you have a lot of like people who are, maybe they're not accepted. They get very upset with me, you know. They say it's my problem. I wasted their time, and you know, you just absorb and say, okay, fine, no problem. But then you have majority, they all have been accepted, just like 1 or 2%, you know.
1 or 2%.
Yeah, which is very small compared to.
Yeah, of course.
To compare to the mass, you know.
Okay, Dr. Patrick, thank you so much for sharing such a rare and insightful perspective, because it's like whole different world in a finance. You said something, such inspiring things that nobody thought that these things ever existed. So thank you so much for your time, and
pleasure.